This pattern you see on the screen here is called the daily structure. It's a market maker pattern that repeats itself on a consistent basis in the Forex market. And this is what I use to trade M and W formation. So I'm going to be showing you how I am able to catch M and W formations at the tip, at the points up here on the second leg. You can call it a sniper entry, whatever you want to call it. So this is the pattern that I use to trade M and W formations. I don't just trade M and W patterns anywhere I see them. I must see this pattern in order for me to trade it. Now, if you're new to the channel, what does this pattern look like? If you're new to the channel, you might be wondering, what is this? What is all this? All right, so this consolidation here that I drew out, this box is called the Asian session of the market. So we know we have three main sessions of the market. We have Asian session, London session, and New York session. This box highlighted here is the Asian session and it's boxed out so you can see the consolidation because Asian session is known for its consolidation. So what happens is price consolidates and price is going to break out of this consolidation. The reason why it breaks out is because there's liquidity above and below this area. Now, after the consolidation, market makers have to make their move, and in order for them to make their move, they have to take out liquidity. Now, liquidity is going to be located above this box and below this box. And if market makers want to go down for the day, they'll have to induce people to take sells if they want to move down. Now, they can also move down without going up, but if they want to get more liquidity or generate more liquidity, then this is what they're going to do. They're going to create a breakout to get people to take these buys up here, and then they're gonna hit the breaks at the top here and form an M formation head and shoulders pattern, or form a pattern, a reversal pattern at these highs here, and then they're gonna reverse the pattern that I like to trade is the M formation. I don't really like head and shoulders or anything different from the M and the B formation. So I will be looking to take this sell at this area here. I'm gonna be showing you how to do that. All right, so we've established that this is the pattern that we're going to be looking for on the chart. The inverse of this pattern is just basically the W formation, where you have breakouts to the downside and you have the W formation. Now, at the bottom of this box is where we have another layer of liquidity, another zone of liquidity. So we know that price has just taken out the liquidity at this area. So we expect price to at least come to this area to take out the liquidity that is here. So if price is in a downtrend, we expect price to continue down, then price has to go and take out this liquidity unless you're going against the trend. All right, so if we're going to be taking sales here at this area here, we're going to be targeting these lows as our take profit zones or any other zone in the past, right? But in this example, we're targeting these zones. So this is the pattern that I'm going to be trading that I'm going to be showing you on how I trade M and W formations. So there was a trade I took this week on GBPUSD. So if you just go to that now, this is the trade here that I took on GBPUSD, and I'm going to be showing you how I was able to catch this trade, my thought process, and what I looked at on the market before I took this trade. So let's just rewind and go back to here. All right. So looking at this, this was on a Tuesday. So after Monday, this was Tuesday. I was looking for sales. So basically, let's delete this. Before I looked at the trade, the day before that, but the analysis I made was I went on the 1 hour chart. I was trying to identify the direction of the chart if I'm going to be looking for buys or sells, right? So we know that we have this huge buys all the way up here. We have those buys here. We have this uptrend. Price has been going up, going up, going up. And then all of a sudden we have what you can call a break of structure or a trend change or a trend shift. We also have, if you look at this closely, you can see a head and shoulders pattern that formed in here like this, which is also a reversal pattern. All right. So we know that price has changed direction. Now we have this high here, we have this low here, and we have this lower high. Let me show you. So we have this high here, we have this low here, we have this lower high here, and then we have a lower low here, another lower high, and then another lower low. So we have established that this is a downtrend, so most likely we're going to be looking for sales. But if you look at this area here, we also have an uptrend that established itself here. But eventually that uptrend got broken, and then we have more break of structure, break of structure, break of structure. So price is telling us that we are in a downtrend. Not only that, when looking at market maker levels, which is how market makers move in trends, we know that market makers move in 3 levels. If you're new to the channel, if you've not heard of levels before, you can check my previous videos. I've explained a level of that concept. Well, the concept is after 3 days or 3 levels of the market going in one direction, the market has to change direction, right? So if we look at this, we see this is level 1 here. This is level 2, and then this is level 3. Then what do we have? We have price making a stop hunt to these lows. We have a stop hunt to these lows here, and then price reversed back to the upside. Now, price didn't give us 3 levels back up, so we have only 1 and we have 2 levels back up. Then we have a change in trend, right? So price began to break these levels, indicating that price wants to continue down. So looking at this, I see that we are in a downtrend, but price could also reverse at these levels here. But overall, my thought process was, okay, this could be a high, this could be a low, and this could be a lower high, and then we'll have a lower low here. So I'm going to be looking for sales. So if we look at this, we're going to be looking, if we zoom into Tuesday here, before London session, we're going to be looking for the pattern that I showed you, the daily structure, the market maker pattern, which is the consolidation, breakout, information, and then reverse. So this is what we're going to be looking for to enter on the charts. Now, this is the 1 hour chart. We're going to soon zoom into the 15-minute charts once we get a breakout outside this Asian box. So this is the Asian box here for the consolidation, right? So let me just play this. That was too fast. Let's take this back here. Let me reduce the speed to, I think, 1 point. All right. Let's see. All right, so we have the breakout here. If we go to the 15-minute time frame to look at this, what do we have? We see that price broke to the upside. All right, we have the breakout here. After the consolidation, we have the breakout here at London session, and then all of a sudden we have a pullback. All right, we have a pullback. So let me just play this just a little bit. Yeah, so we have price went to the upside and then pulled back down. So now we know that we've established that this is the high of the day. This is the highest point for the day. What I usually do is I draw a box from the wick, from the top of the wick to the body of the candle. So I draw a box here. This is my entry zone. So this is going to be my entry zone. So if price comes back to this box, if price comes back to this box and gives me rejection, some candlestick patterns that indicate rejection, then I'm going to take this trade back down. So that's going to be my second leg. So let's play this and see how this looks like. Also, one thing that I also used to confirm that that is my second leg is I use my Fibonacci tool here. If you see, this is the Fibonacci tool, and I draw from the body of the candle. So from the close of this candle of here, I draw to the close of when they want to form the second leg. So let me wait for the neckline to form. Once the neckline has formed. Yeah, so we can see here that the neckline has been formed. So I draw a Fibonacci tool from the close of the candle to the close of the neckline here. So I don't account for the wicks. I only account for the body of the candle. So what I wait for, the reason for this is to confirm my second leg to make sure that I have a good entry. So I'm entering at the right area, right? At the right zone. You can call it like a discount zone or something like that. So what I look for is the 78.6% for price to close, for a candle to close, for the candles to close above this 78% mark, and then tap this box, touch the box, and then give me a candlestick pattern. So let's see what happens here. All right, so if we zoom into this, you can see that this candle closed above the 78% mark. So that's a good sign. That's a confirmation that, okay, if they give me a second leg, that's a good second leg. So they gave me this rejection here, and then we have a star formation. So looking at this star formation, this tells me that this is a rejection. Price came to this box, tapped it, and then is now going back down, giving me a star formation here. So all I have to do is wait for the red candle to close. Once it closes, I enter here, put my stop loss above. Stop loss is always above the high of the day. So I put my stop loss above the high of the day like this, a few pips away. Let's see how many pips is this. So, so something like this, right? And then where will I be targeting? I'll be targeting this lows because I know that there's going to be a level of liquidity below this area. So I'm going to drag this all the way back down here. Let's say something like this. And then let's play this out and see how it goes. Let me clear this arrow. So let's see. So yeah, you can see price eventually came to the take profit, but you can see that it went back there to tap the zone again. So basically they gave us another M formation here like this, gave us another rejection. So the trade is valid till they break this high, right? Till the highs are broken, the trade is still valid, and the trade is valid for only if you're in the trade is valid for only 2 hours if you're not in profit. So for example, if I entered here and I count and it's 2 hours and I'm not in profits, then I'll close the trade. But one thing to also note is if they give you, let's say you enter on the second leg, if they give you a third leg, which is this is the third leg. So we have the first leg here, second leg here, third leg here. They give you a third leg before the 2 hours has reached, then you have to reset the clock. So from here to here is 1 hour 15 minutes. They give me a third leg. I count 2 hours again from there. And then in 2 hours time, I'm halfway to my take profit and price eventually hits the take profits. All right, so this was how I caught this trade on GBP USD. There was another trade I caught on EURGBP, but it came back for a break even. That trade came back for a break even, which sucks. Came close to the take profit, but came back for a break even. It was the same day, so just the inverse of GBP USD. So this one, looking at this one, it was kind of choppy. So we have this reversal here after this downtrend, and we have market makers breaking structure to the upside. All right, so we know that this is an uptrend. All right, this is an uptrend. So I was gonna be looking for buys. So if you go on the 15-minute charts at this area here, go on the 15-minute charts, we have price give us the consolidation in here. Price broke to the downside and then gave us a pullback. I draw my zone, my entry zone, easy, from the body of the candle to the wick and wait for price to come back to that zone to retest the zone for W formation. Let's increase this to 3. Yeah, so as price came back to retest the zone, let's confirm the second leg with the Fibonacci tool here. You can see that price closed below this zone, this 78 mark. So that's a good second leg. Price also gave us a engulfing candle and a hammer, right? So I entered there, put my stop loss just below this low of the day, right? So this is the low of the day here, the lowest point for the day. And then I was targeting these highs because there's a level of liquidity that is above these highs that market makers need to go and take out if truly this is an uptrend. So they're gonna have to break this high to form a higher high. So I set my take profit there. Price gave me a little bit of hits and then moved in my direction, right? And then came close to the take profit. I think this was the highest point that it got to. Came close to the take profit. And then I was set at break even at that time. And then price eventually came back at the end of the day came back and hit me at break even. And then the crazy thing is the next day, what do we have? The next day, price runs all the way up there and the breaks the zone. So yeah, unfortunately, that's what happened. But this was a good trade. If we had hit my take profit, that would have been nice. So yeah, if you guys found this video helpful, click the like button, subscribe to the channel, and if you have any questions, leave them in the comments, and I'll see you guys on the next one. Peace.